What's going to be interesting is to see, with the technology evolution, what's going to be happening over the next, 5 to 10 years. But that's part of our, our edge bucket number 3.
Yeah.
Okay, that's a tool that we put it, throw down in that edge bucket, and the price ladder, the DOM. It's not a B-book tool, right? Within, I know there's a lot of these FX brokerages out here on, in Cyprus. I think it has the greatest population of FX brokerages per capita on the planet.
Yeah.
And the price ladder, the direct market access, linked up in all to the global exchanges, you're seeing the participation of someone with zero experience or a large institutional fund. And that activity that goes on the price ladder, it's the closest that it gets to being on a pit or on a floor. That's why the gamers pre-2000 were able to transition as opposed to the pit traders, because they were more used to that embodied experience of being on a trading floor, that physical proximity, the smell of fear, the scent of fear, the seeing another guy on the opposite side of the room sweating and understanding what orders he might be what orders he might be holding. But that DOM is that great kind of gamer's representation. And as a tool, when you gain more experience, and I just want to diverge a little bit, I call about that slope of intelligence. If you were to draw an axis, you have the X and the Y axis, along forget my axis, but along the Y axis you have experience and time, and on the X axis you have P&L. And the trading tools that you select over a period of time, if say for example you choose just candlesticks, your P&L over time can actually veer towards negative by just using that tool, or just using a bar chart tool, or just using a footprint tool. Now, every tool that you add on that slope, every tool that you add on that axis, as you add the candlesticks and then you compound that with a footprint, all of a sudden the slope starts pointing towards the upside. You then overlay the price ladder on top of those. So as your information spectrum starts becoming richer in your understanding of the probabilistic setting of a trade setup, your slope just starts changing. The gradient change towards P&L becomes more handsome as you gain the experience. You still need to develop the experience, the skill sets, understanding the environmental regimes as the market starts shifting. But that slope of intelligence is a function and a product of the tools you add into your observations of the market. You add the wrong tools, you can add more tools and go the opposite way.
Yeah.
If you add the right tools, you go in the positive way if you gain the experience. And so the price ladder, there are so many granular patterns. Now, you've also got to be careful when you're a new young trader, you haven't cultivated discipline, you haven't developed the edge, it becomes almost like crack cocaine, where you're just seeing, it's like going to Vegas and seeing all the lights, and that's what it's like, right? When you're a new trader, we have one of our junior traders here sitting opposite here who's just joined the floor, and becomes exciting because it's so highly suggestible, the ladder.
Yeah.
It seduces you. There's a little flicker of move, and your FOMO side gains attraction. So once you understand the patterns, once you understand the order flow, once you understand how you interface with the market, once you start understanding how you cultivate your discipline to wait, it is the only tool that every single one of our traders use, that then once you cultivate that skill, that's where the nonlinear sizing comes in, and it's a tool that you can apply the greatest deployment of capital because of the information input that it's giving you in real time will tell you how wrong or right your trade is.
Yeah. Incredible. Yeah. Just lastly, just on this segment on tools, and since you referenced the footprint as well, it would be a shame not to throw the footprint into this discussion. You referred to the footprint as well in the past as the price ladder, frozen and moving. For traders managing multiple markets, how does utilizing the footprint, or how can utilizing the footprint help them quickly access past market activity and adjust their strategies?
Yeah, the footprint chart, it appeared, at least within the prop trading setting, new tools always come from the grassroots levels up. It's like certain large language models on our floor and how traders are utilizing them. comes from the junior traders first.
Yeah.
And they find, more productive ways, more efficient way, more effective ways to observe the market. And that's how the footprint entered, our domain. And that came in, I think 2012, 13, one of the first main charting companies, I think it was Market Delta. And they developed the footprint. And what's great about the footprint is that it's like you watching a cartoon, or you're receiving these snapshots of the ladder. Then all of a sudden, if you're peering, you've got 20 ladders, you're trading multiple global macro futures markets, and you want to understand what the activity, something's come out or there's been an accelerated move in the market, and you can quickly assess of what the price ladder has been doing, but within a snapshot of the footprint. And then within the footprint, there's a whole universe of patterns. And I'd put the footprint in the edge bucket 2, okay? In that edge bucket 2 of, accessing your plays. Now, you're not seeing price move, but you're seeing where those zeros are lined up. If there's been a stop, where the first bit of action and auctioning activity has happened, where there's been an iceberg pattern, if you haven't been looking at copper or the ZN or ES or crude, the crude market. So it's a great partner for the price ladder, and it's almost that middle partner between the profile and the price ladder, as the footprint stands in the middle.
Yeah.
As those three tools linking and communicating with each other.